Sorry I kept you waiting forever and a day. But now we're out here together with nothing standing in our way. Can you feel the attraction? Feel the attraction. Can you feel it between us? This energy's inside us like electricity. Feel the love running through like electricity. Feel the love running through like electricity. Like electricity. Taking over your body, it's flowing through your mind. This feeling's got me on fire. Don't ever leave it all behind. Can you feel the attraction? Feel the attraction.
Okay.
Can you feel it between us? This energy's inside us like electricity. Feel the love running through like electricity. Feel the love. Can you feel me? Ooh, can you feel me?
Echoes of your words crashing into me. Drown me in your lies, and there's no way to breathe. And my walls will keep you down. I am safe without the sound of you around. It's getting colder, and I'm the storm that's taking over.
What's going on, traders? Welcome. 1 second. Whoa. Jesus, I hate cords on headphones, bro. What is that? What is this? What's going on, Mr. Bear? How you doing tonight? Welcome, guys. What a way to start stream. Dude, I didn't check the I didn't check the light, the overexposure that I had just now. New crib, yes sir. No, I'm at my parents' place until the new apartment's ready. You can play about a cold basement, but isn't that a fireplace behind me? Yeah, it's electric. It's freezing down here, but I'll never turn that on. Never. You can't convince me to turn that on. Never. Mom, get out of my room. New to us? Yes, sir. Turn it on. What? Never. I'll never do it. Welcome, guys, to another episode of Traders Spotlight. Today we are featuring the amazing singles and doubles from Sapphire Trading. Yes, sir. The king of trader psychology, risk management, and day trading small caps, the man himself. Let's get him in here, shall we? Hey, by the way, I made the camera the whole screen now. Do you see that? The camera's the whole screen, and I also took off the chat. I don't know why. Should I put it back, or did? Actually, I didn't take it off. It's just not working. It's just not working. So it's not a glitch. It's a feature. All right, guys, let's get into it. I'm going to pop. Hey, it's back. I fixed it. There you go. Oh, thanks, Mudcats. You're the first chat on screen. I feel like you're speaking directly to me. I am. Okay, I am. All right, guys, let's get them in. Singles and doubles. I'm just gonna flip over to the other playlist here. My lo-fi playlist. So if you guys enjoyed Jason by the Midnight, definitely check them out. I'm not sponsored. Don't know why I always say that, but let's get into it, guys. Let me pop him on voice, and I think I'll switch my face cam over so he can see my beautiful face. We'll figure it out. Here we go. Hello. Oh, shoot. Hang on. Hello, sir. How are you doing tonight?
Good evening.
Good evening.
How are you?
I'm good, man. How are you?
Good. Can you hear me okay?
Yes, sir. Sounds great. Let me just one thing here, and we're pretty much ready to go. I'm going to pop my face cam into Discord so you can see me. One sec.
Okay.
I mean, it's not going to matter. It's just going to look better on the in the video version. So just one sec here. So how's your week been so far, man?
Things are good. I'm glad to be back. I appreciate the invite. Thank you.
Yeah, of course. And have you found? 'Cause I know small caps kind of was slow like last time we were talking. So how have you found small caps in kind of recent times?
Well, I think it's been a lot better the last few weeks compared to what it was at the beginning of the year. January wasn't much fun for most of us.
Right.
But things have improved, and starting to see some areas and some plays more often. So that's good.
No, awesome. Love to hear it. Yeah, I've been seeing you tweet out a bunch on Twitter, doing your call outs, just doing your thing. And it's been awesome, man. I love what you do. Like, bro, I think everyone can appreciate it. You're helping people learn. People are making money off you. It's just a great thing that you do, a good service for free too, which is cool. And you guys can sign up for Sapphire Trading. The link is in Singles and Doubles bio, I believe, and that's where he's doing most of his call outs. But yeah, I thought we'd kind of dive into basically a lot about what we talked about last time, but maybe we can talk about it in more detail since small caps are kind of heating up again. And I'd love to kind of go over your trading strategy, intraday, and kind of what are some A+ setups for you, and what's your psychology and mindset like in the current market? Let's start with maybe some trades you took this week, if that works for you.
Oh boy. Well, I've taken a handful of trades. I think all of them have been small caps. So typically it's stocks trading under $5, sometimes under $10. But I'm not out trading Apple and Google.
Right.
I'm sticking pretty much to what I'm used to and what I feel like I know better than the other stuff. And I think that as many people know who have followed me for a while, I always focus on discussing going in with a plan. Small cap stocks are very volatile, and that's good, but that can also be bad. And so you've got to have a plan going into each of these trades. And it starts for me with identifying a potential entry point, and then before I take the trade, determining what my stop loss point will be if I'm wrong on the trade. Because we're not always going to get it right. I get it wrong many, many times. But having that stop in place before you determine what your potential reward versus risk could be is critical. And so my thought process always goes the same way. And if I keep taking those steps on a potential trade and it makes sense, then I make the trade. And if it doesn't make sense, then I move on to the next one.
Gotcha. So let's say, it's the start of a new day. You're getting ready to trade. What's your morning like going into the trading day?
My morning really starts by looking at news and seeing if there's any press releases out for companies on my watch list. I follow 65 stocks at a time. I'm constantly moving stocks in and out of my watch list. So I start by looking at that watch list to see if any of these companies have had news pre-market. Okay. And then I kind of expand out and look at the broader market and see what news is out there that might tie into the small cap world. I get a lot of that info from people on Twitter. There's some excellent pieces of information on Twitter, and the people I follow on Twitter are real good about putting out information like that as they see it or they find it. So I might see it there, I might see it on my own due diligence, but it starts with my own watch list and the due diligence PRs that I read, and then expands to the broader market. So that's how it starts every single day. I don't trade pre-market very often. When I do, I trade smaller size. I usually like to wait until the regular session is opened and wait at least 20 minutes after the regular session is opened before I kind of get into it each day. And there's always going to be plenty of plays or potential opportunities that arise. So I don't feel like there's necessarily any rush to get it started early, and I don't necessarily feel like taking a trade on a runner pre-market that may not last into the regular session.
Got you. Do you ever hold anything from pre-market into the open, or is that you try to or do you even trade pre-market? I'm not sure.
When I trade pre-market, I trade small size.
Gotcha.
And I may or may not hold it into the regular session. It kind of depends on what I'm seeing with the volume and what I'm seeing with the overall market trend. And the one thing I don't want to do is step into a pre-market trade and then hold into the regular session and catch a falling knife.
Right.
So I try to be very careful, and I guess in part that's why I go in with smaller size. My feeling is that if something is a runner pre-market on legitimate news, even if I don't take it pre-market, I still may have an opportunity to come back for it during the regular session if it dips. If it doesn't dip, well, then I missed it and I move on to the next one. But I would almost rather look at taking it then than to try to force it pre-market and risk making a mistake and start my day that way.
Gotcha. Okay. And do you like the morning volatility, or do you kind of wait for things to settle? Like a lot of large cap traders, they'll wait like 15 minutes for kind of that crazy volatile price action to finish up. Do you like that? Do you trade that, or is that something you kind of wait out?
One of my rules is to try and not trade the first 20 minutes of the regular session. I mean, that to me, that's just chaos. And I see things moving all over the place, and you can get whipsawed very quickly. And I like to wait until at least 20 minutes or 30 minutes has gone by during the regular market session to kind of see what the rhythm is going to be of the market and see if a trend is going to become established. I have found that doing that, staying patient that way, instead of forcing something right when the market first opens, has been good for me. And I know many excellent traders that trade that first 20 minutes, and some are very good at it. I am better when I wait and see the market trend and then act from there.
Got you. Okay. So one thing I'd love to hear your take on is it's a big discussion recently. At least I've been trying to push some information out about it and get some traders kind of critically thinking about it. Is risk management and how to define that risk when you're taking an entry into a trade. What does risk management mean to you, and how do you define that when you're entering a trade?
Well, this is at the cornerstone of everything I do in trading.
Gotcha.
I mean, it's for me. It all starts with defense first, and I talk about this on Twitter. I want to say every single day. Sometimes I say the same thing in different ways to try to get the point across to people, but it's all about defense first. And so for me, risk management is identifying as best you can, if you're wrong on a trade, where you're going to get out. If you're right, the rest will take care of itself. But when you're wrong, this is where people get in trouble, because if you don't have a plan going in, well, then you're caught off guard and things are moving quickly, and you find yourself wondering what you're going to do when the trade is not going the way you want it to. But when you go in with a plan, you're identifying risk. So for me, if I'm thinking about taking a trade, the first thing I ask myself is, what's my stop loss point if I'm wrong? Then I ask myself, if I'm right, can I get a 2-to-1 or 3-to-1 reward versus risk return on this trade? I'm not looking to hit home runs. I'm not looking to hit triples. I'm just trying to hit singles and doubles, base hits over and over again. And so for me, people say, well, what does that mean? Well, it means a 2-to-1 or a 3-to-1 return. Now, once you're in the trade, if things change, you have to adjust, and you may have a winning trade and not get a 2-to-1 or 3-to-1 return. But going into the trade, if I'm risking 15 cents a share, I want to see a way where I can earn 30 to 45 cents a share, and so on, depending on whatever level you're buying it at. That's how I think. And so I start with what the stop is, and then I try to see if I believe that the chart, the volume, the market trend is set up. Maybe there's a recent catalyst that's going to drive the stock higher to get into that range where it becomes a nice trade for me. That's how I think about every trade, every single time I make one. I mean, every time. And so that to me is risk management, because if I take that trade and I'm wrong, I don't even think twice about selling the position. If I take the trade, it hits my stop, I sell. I don't try to convince myself that it's going to come back and the market's wrong and what are people thinking or any of that stuff that'll just mess with your mind. I just sell. I accept the loss and I sell. So that's huge for me. The second thing I do is, people say, well, where do you set your stops? For me, it's always one of two things. My risk will never be more than 10% lower than the price that I bought the stock at. If I bought a stock at $3, I'm not holding that stock under $2.70. But the other thing I factor in, which I've spoken a lot about in recent months, is quarterly whole numbers, psych levels, which to me occur, every 25 cents, 50 cent mark, 75 cent mark, the whole dollar mark. So in the example I just gave you, if I bought the stock at 3, 10% is 270, and I could hold it to that level, but I'm not going to hold that stock below 275 because that's a quarterly whole number. And what my experience has taught me over the years is that when stocks are declining and break through quarterly whole numbers to the downside, nothing good happens. it can be a free fall from there, and it's just not worth the risk. And so my stop loss going into a trade is always one of those two things. It's always the 10% level below my entry, or it is the quarterly whole number, or just above the quarterly whole number. Really, it's not the quarterly number itself. It's a little bit above, so that I get filled no lower than that quarterly whole number. So it's really whatever comes first if your stock is heading lower. That is how my trade's set up almost every single time.
Right, got you. Okay. No, that was a really
That
great
makes
answer.
sense?
Yeah, no, totally, man. That's a really great answer. By the way, I just want to mention to chat, if anybody has any questions, you can type them out in chat and just at 100_million, and then I'll ask them to singles and doubles here. So let's talk a little bit about profit taking. And like, I know this is a pretty big issue, especially for newer traders. When the stock starts to move in their direction, and maybe it's because a lot of newer traders have smaller accounts, but I see a common recurring issue in which people aren't taking profits maybe when they should be, and then they let a green trade go red. What are kind of your thoughts on that, and maybe some correctional actions someone could take?
Sure. Well, that's a great question. Great questions. And I get that a lot. People DM me
Right.
that a lot. And so what I do is, so I enter the trade and I know where my stop is. And let's say the stock starts moving higher. Once it moves higher, not by a little where it's a penny or two higher, but if you start getting some clearance from your entry where you've got, like, there's some room there, I always move my stop up to my break-even point or just above it. So in other words, if your trade has started green, not scalp level green, but more than that, right? You're working your way up and the things are working. I'm not taking that trade red. I mean, I may break even on that trade, but once we start going green to a certain level, I'm going to move that stop up so that worst case scenario is break even or even a penny or two above to make a couple bucks. So that's the first thing I would say. I see too many traders that the stock starts moving in their direction. They don't do anything with their stop. So a stock for example, you buy the stock at 3, and now it's 312, and your stop was 290. Well, my stop is going to be moved up to 301 or 302 immediately. I'm not going to leave it at 290 and risk not only losing the profit potential I had in the trade, but now I'm going red on that trade, and I turn a potential winning trade into a losing trade. That is no bueno. That is bad.
Mm-hmm.
Cannot do that. That's the first thing. The second thing is people say, well, I don't know if I should, my stock's moving in my direction. It's going well. I don't know if I should hold it or sell. And I tell people, look, if you're not sure, sell half. Just sell
Right.
half and hold the rest, and then you may have the best of both worlds, but you're locking in some profit, and you're kind of letting it ride. The other thing I tell people is keep moving that trailing stop up. So I had a trade last year one day in Sapphire that I recall where the stock had an 80-cent move, and I was trading it live in the room, and every time I moved my trailing stop up, I posted that in the room. I wanted to show some people kind of what I was talking about, and that was a good example because the stock was running higher. It was a very nice trade, and I was moving it up 10 cents at a time, and eventually, after an 80-cent move, I got stopped out. But it just was, it wasn't to try to impress people. It was to try to demonstrate to people that, like, look, if you're an active trader, not you're swing trading it and you're parking it and you're doing something else, you're going to leave it for weeks or months or whatever, that's different. But if you're an active trader and you get the move, but you want the potential to have it go even higher, just keep moving your trailing stop up. Eventually that trade will end when your stop gets hit. Eventually you will give back a little bit of the profits, but you've been moving it up along the way once, twice, 3 times, 5 times, and every time you move it up, you're technically locking in more and more when that trade eventually ends. So those are the things I do. I move my trailing stop to break even to start. I might sell half instead of all if I want to keep it and see if it's going to run higher. And as it is moving higher, I am moving my trailing stop up along with it. That's how I trade.
Gotcha. No, I love that. That's a perfect answer. And as far as entries, maybe for yourself so are you going in like heavy, or do you like to scale in and scale out? That's essentially my question.
It both. It
Okay.
depends on it depends on what I'm seeing with the chart and the volume. I mean, I dip buy a lot, and so I look for confirmation on that dip with 1 to 3 candles on the 5-minute chart to show support, as long as there's some volume there. And if I really believe there's support there, I'm going to come in with a full position right away. But a lot of times, if I'm kind of feeling like there is, but still not totally there, I might scale in and see if it gets a little move higher, and then I'll buy the rest and kind of ride it as it starts going. So it really just is it's almost like a game time decision based on what the chart is doing. There's no right or wrong, because for me, if I buy it with smaller size and I plan on scaling in, and then for whatever reason I decide not to, but the trade still works out, well, it was still a nice trade. I might not have bought as much as I wanted to, but it was still a nice trade. And I'm okay with that. You know, the biggest thing I'm trying to avoid is to step into a trade on a dip buy and catch a falling knife because I didn't wait long enough to see support get confirmed on the chart with the volume and the trend. So that to me is more important almost than whether I buy it all at once or scale in. But it varies.
Okay, got you. Okay, no, that makes sense. And what advice would you have for someone with who's maybe starting out? They have like, $500 to $1,000. How can someone like that scale in and out?
Well, it's tough.
Right.
It's tough too, and it's I guess the first thing you have to decide is what kind of account you have. Do you have a cash account? Do you have a margin account?
Right.
$1,000. I think you have to have like at least $2,000 or something like that to have a margin account in the first place. But assuming, let's say someone does $2,500 or $5,000 trying to figure out what to do, you've got to understand what you can and can't do in a cash account versus a margin account. And once you know and you decide which way you're going to play it, then you have to adjust your strategy accordingly, because there's pros and cons to each, and there's some good things, but you're limited at the same time in other ways. And so I guess the first thing is to make sure that you're completely educated on the type of account you have and what you can and cannot do, so that you do not incur any trade violations as you try to ramp up and build up your account.
Okay, got you. We have a question coming in from chat too. I like this question a lot. How do you find the golden middle between hesitation and patience?
That's a great question. I think that you have to, you kind of have to go into each day, at least I do, expecting nothing. I don't step in every day and just decide I'm going to start, firing at trades and this and that. I mean, I kind of go in expecting nothing. I almost expect that maybe there will be no trades to take today. It's never happened, but that's kind of the way I think. And I think that by doing that, you become more patient and you know what you're looking for. And when you see it, then it's time to act. And so to me, hesitation comes when you take a trade and you really haven't thought it through or feel in your mind like it's necessarily a good trade. Everyone knows what it's like to take a trade when you were waiting to see something, you saw it, you didn't even blink, you just pulled the trigger and bought it. That is what you want more often than not. Hesitation occurs when something's not right, you're not quite sure, there's some things you like, but there's some things that you don't like. And my feeling is, look, if you can't really see it through to have confidence in it, then just wait. Don't take it. I'd rather hesitate and be wrong by not taking it than to take something that was marginal, that I wasn't really sure about, and have a nice big red trade occur as a result of it. I think that those are my thoughts on it. And the other thing is that I feel like each day, this period, some people trade pre-market, and that's kind of their gig. As I said earlier, I rarely trade pre-market, but it's not like I'm not sitting at the computer. I'm sitting and studying charts. I'm reading press releases. I'm looking at the market. I might be watching CNBC. I'm trying to make sure that I'm in the right frame of mind so that I know what I'm thinking is going to take place potentially during the market day, so that I don't hesitate if I see a setup that I like.
Got it. Thank you. I hope that answers your question, Scow. Thank you for the question. So there's a question in chat about bag holding. I know that's kind of a common theme with not just small caps but large caps as well. What is kind of your take on bag holding and like just cutting it, man? Like how can we prevent bag holding, I guess, is essentially the question. And maybe it has something to do with respecting your stops or having a plan in place. What are your kind of thoughts on bag holding?
Well, I'm laughing because anybody that's followed me for a while knows that I tweet about bag holding maybe more than anything else that I tweet about. I despise bag holding. I think it's very poor trading.
Mm-hmm.
I think that it's how you go broke. I can't say enough bad things about bag holding, and I can't think of one good thing to say about it. I mean, bag holding is knowing that you should have got out, but convincing yourself that it's okay to hold it anyways. And, I don't want to sound hypocritical. People who know my story know that I went 7.5 years doing things like bag holding and holding too much size and holding too many positions and not respecting stops. From 2012 to 2018, I bag held a lot. Mm-hmm. But for the past 3+ years, I haven't bag held a single stock. If I'm wrong, I cut it. And the difference in one versus the other, at least for me, was a 180-degree change in my trading career. When I stopped doing things like bag holding, I became a consistent, profitable trader month after month after month. And you know what? It's because I'm not holding garbage when garbage is not running. It doesn't mean that it can't run someday, but if anyone who's traded for a while knows that just because a stock dips does not mean that it's going to come back. It might come back, but when a stock really gets hit hard, I could share story after story. For every stock that bounces and comes back eventually, I can give you 20 or 30 or 50 stocks that never saw the light of day from their previous highs, and especially with small caps. And so this thought of holding it into the ground is just something that I just don't know any really successful traders who do that. You just simply can't do it. And so I am non-negotiable when it comes to bag holding. Everyone else can do whatever they want, but anyone who asks me gets the same answer every time. Don't do it. And for me, that's a 10% loss from entry. For others, they may say, well, it should be 15% or 20% or 30 or 40 or 50 or 80% because they've got, quote, conviction, unquote. And I don't buy any of that. I think that when you're wrong, you're wrong. You took the trade initially for a reason. And people say, well, if I'm wrong, I should average down, right? I should average down so that, I lower my basis. Well, you can try that. Sometimes that works, but oftentimes it does not work. And the first stock I think about where that doesn't work, and there's many examples, but I look at a stock like Wish, from 13 to 11 to 9 to 7 to 6, 4, 3, now sitting at $2.19.
Right.
Anyone averaging down is absolutely buried in that stock, and it's going to take large triple-digit increases on a percentage basis to even get anywhere close to even. That's why you don't do it. Right. You have to respect the market. You have to respect price action. And anyone that thinks they're smarter than the market will eventually get a harsh dose of reality.
100%. And let's expand a little bit on the averaging down. Is that something that you'll ever do? And what situation is that in if you do average down at times?
Sometimes I will average down a position if the market is good.
Okay.
I do not like to average. Like today, the market was not good. Today is a bad day, at least during the regular session, to average down on anything.
Gotcha.
I did average down on a play after hours by adding a few shares when I saw that it was getting sold off a little bit on just a handful of shares. I mean, it was almost like I'm not going to say it was a fake drop, but it was just not a significant drop. Doesn't mean I'll be successful on the trade over time, but I do like to average down if the market is good. When the market is bad, I don't like doing it because a lot of times when the market's bad, nothing's going to run. And
Right.
so you're in a position when you do that where you have to decide if you're going to hold that stock for a day or a couple days or longer. And, that's not really how I trade. So if I average down, it's either going to work for me fairly quickly that day or the next day, or I'm probably just going to sell the whole position and move on.
No, 100%. Another question from the chat here from one incognito. Do you have a daily goal in mind when you start your trading day, or do you think that's kind of a bad mindset to enter the day with?
Well, I know that some people like to have daily quotas, weekly quotas, monthly quotas, and if that works for you, or if that's working for you, you should keep doing it. I don't think that way. I don't trade that way. I try to be green every day. I try to be as consistent as possible. And green days matter to me because I've seen what happens when you start stacking green days together, one after the other. I was red today, but before today I had been green 16 days in a row. I've had longer streaks, but that was a nice streak. And you can see the compounding effect that can take place when you are doing that. The other reason that I'm not really a fan of daily quotas is I'll see people who will have a daily quota regardless of the amount. They hit their daily quota and they just decide, well, I'm done for the day. I don't have a problem with anybody doing that. But to me, if I'm trading, if I'm watching the screen and I see a potential trade that really looks attractive, I don't want to stop and think, well, I'm not going to take that trade because I'm already at my daily quota.
Right.
I can't relate to that. I'm
Right,
taking
right.
that trade. I'm taking that trade 100% of the time. If someone has a daily quota and when they hit it, they're walking away, no problem. If you're truly walking away. But a lot of people I know hit their daily quota and they're still staring at the screen. And my question is, what are you looking at it for? Don't tell me don't tell me you're charting. Don't tell me you're setting it up for tomorrow,
Right.
or the day after. You're not acting with conviction on what you're saying you're going to do. So to me, no, I don't have a quota. I just trade. If it makes sense and I see it, I don't care if I'm up, down. I don't care if I've taken 5 trades or 22 trades.
Mm-hmm.
If the opportunity's there, I'm taking the trade every single time.
And so you don't really have a point where you're like, all right, I'm done for the day. I just nailed that. Like I'm up, whatever, and I'm walking away. Well, you'll sit there and kind of just like scan and analyze and just kind of look for those A+ setups. And if you see one, you'll just enter.
If I'm walking away on a given day, for whatever the reason, then I'm walking away. If I'm walking
Gotcha.
away, then I'm leaving the screen.
Commit.
I'm done.
Yeah.
If I have a meeting or something, or maybe I just feel like I'm done trading. I'm not really 100% focused, or whatever the reason is. If I'm leaving, I'm leaving. And when it's time to come back and study and chart and do all that after the market's closed, or at night or early the next morning, I'll do that. But no, if I'm watching the screen actively, I am ready and willing to take a trade if I see one. If I don't see one, I'm not going to take it just to do it. You know, that
Right.
this part of the skill comes in sitting patiently, waiting and watching. And I can sit and wait and watch if I have to for hours, if I have to.
Right.
But if I'm watching and I see something, then I'm done watching. I'm acting.
Gotcha. No, I love that. I think that's a great rule. I'm getting some more questions from chat, so I'm just gonna kind of just start throwing some at you. When you're looking to place your stop, is it you're placing an actual, like, you have a triggered stop, or are you using mental stops? Because I see, you know, it's kind of mixed on FinTwit.
Right, right. If I'm at my computer, I'm using a mental stop.
Okay.
If I'm away from my computer, I'm using a hard stop. I told a story last night on Twitter, which I also shared previously several months ago, that several years ago I went outside to take the trash out, and I was literally outside 3 minutes, and I had a stock with no stop, and it knifed, and that was a very expensive lesson. I mean, I
Right.
literally was outside for 3 minutes,
Oh my God,
and
dude. No
was
way.
in trouble. So yeah, so you learn. You know, you don't forget things like that. You learn from that. So
Yeah.
for me, if I'm at my computer, it's mental stops. If I am away from my computer, I set a hard stop. But I always have a stop in mind and respect it.
Got you. Another question coming from chat. How much time do you spend studying the market when it isn't open?
A lot,
Okay.
a lot. I read a lot. I read many press releases. I like to study charts. Um, I like to kind of dive into sectors and see what's going on. I like to read articles. Um, so quite a bit, actually. You know, for me, it's not just about the physical act of trading. It's a lot about the homework that you do and the preparation that you do in between when the market's open. That makes a big difference for several reasons when the market is open. So I would say quite a bit.
No, that's awesome. I think it's really important, and I think a lot of us are the same way. Especially the sectors too. Like, sectors is huge, especially in small caps. Got another question coming in from the Bastard Trader. Do you have any traders that you kind of looked up to, or like a specific style?
Well, I admire several traders, more than several. I admire many traders, and I won't start naming names because I
Yeah.
don't want to leave anybody out. But I have learned a great deal from, and continue to learn a great deal from many people. I think every trader, when you start to uh, when you've been doing it for a while and you start to follow and interact with other traders, you learn very quickly what those traders' strengths are. You know, and
Right.
every trader has different strengths, and so I try to pick up bits and pieces of other people's strengths that I can use and implement in my own trading. And I can think of many examples of using that to better myself over the years, especially the past 3 years. You know, because you always want to keep learning and growing, and I learn new things from people every day, and so that's fun for me. I enjoy that, and yeah, I try to surround myself with other people that are better than me, in the hopes of continuing to progress.
Positive, successful, hardworking people. I think that's
Yeah.
really important. And to follow that one up, do you have a favorite setup that you see it and you just gotta take it? It's an A+ setup, and you always take, you know, that setup. And what is that setup?
I think that for me, I like to buy dips. I don't like to buy dips late in the day. So I'm not talking about when there's like 60 minutes left in the session or 90 minutes left. Dip buying late in the day is trouble, because usually if it's dipping late, it's not coming back. But earlier in the session, I like buying dips. And part of the reason is that because I think a lot of times stocks open down in the morning. The majority of stocks open down, not up. And so you can find opportunities once they settle if the volume's there. And I like buying stocks like that that have had 1, 2, 3 candles on the 5-minute chart showing support where I believe a bounce is coming. I use the 13 EMA on my charts, and if I see a stock that retraces above the 13 EMA and is also showing volume support and a trend line turn, many times those can be fantastic trades. And I've always had success with those types of trades. So I look for that probably first. It's probably my favorite setup. But late in the day, I look for breakouts, because if you see a stock that, for example, maybe it's tried to break 2-3 times earlier in the session, it hasn't been able to break out, but it keeps coming back and testing that high. You know, when you get late in the session, if it breaks, it could be explosive to the upside. And so I like looking for those types of setups as the day gets later. And oftentimes, if I get it, I will hold that stock in the after hours to see if there's continuation, because many times there is. So those are really my two go-tos. But the dip buying is certainly number one for me.
Awesome. Yeah, I forgot you used the 13 EMA. That's really unique. I don't see, or at least from traders I've talked to on the show, it's not a very common EMA. So it's kind of cool to hear about that one. I found it really interesting.
You know, people have asked me, why do you use the 13 EMA? And
Right.
I really can't answer the question, because I know people that use the 9 EMA. And
Right.
especially if you're day trading. I mean, it would make sense to use a lower EMA than 13, but I was trained years ago with the 13 EMA, and so I have a comfort level with it that it's just my preference. And so that's what I use. And really, it's the only EMA I use. I mean, my charts are clean. I don't junk up my charts with a bunch of stats and all that stuff. I mean, I use a 13 EMA line. I use 5-minute candles, and I look at different time frames with those 5-minute candles, and that's it. I mean, for me, the less clutter when looking at a chart, the better, because you can always find pros and cons if you keep adding things to it. And I don't want to do it. I won't do it.
100%. A bunch of questions coming in chat, but I'm gonna ask one before that. Do you ever trade? So you're big dip buyer, pullbacks, that sort of those sort of trades are kind of your cup of tea. Will you ever trade a breakout? And how would you kind of like agree that the stock is breaking out? What do you look for confirmation of a breakout? That's the word I was looking for.
Well, I look for a high a day break to start with.
Gotcha.
I got to see a high a day break, and I also need to see maybe, like I said earlier, a couple times during the day where it tried to and couldn't.
Okay.
Because if a stock keeps coming back, someone wants it, and they drive it higher. But you have to have the volume, so you can't just look at the price or the chart. You have to have a break. A breakout is not just the chart, it's the volume. If you see a stock breaking new highs with increasing volume, that's what you want. You know, that's what I want. And so if I see it breaking high a day and the volume is not really corresponding, going along with it, I'm probably going to wait, even though it's just broken out, because I got to see the volume, or you know, they might come in and they might just drive it right back down. So those are the things I look for on a breakout.
Got it. Okay. What criteria, this is from chat, from one Incognito, thank you for the question. What criteria does he use to set up his scanner looking for new setups? FinViz, for example, or do you just play momentum?
I have a watch list of, I'm on Street Smart Edge with Schwab. That's
Gotcha.
my software. That's my broker.
Okay.
And on my display screen, I have 65 stocks that comprise my watch list. I'm constantly moving stocks in and out of the watch list, and so it's not stagnant. I might move 5 to 10 stocks out of that watch list during the day and put 5 or 10 other ones in there. So it's fluid, I guess is what I'm saying.
Okay.
Those 65 stocks are comprised of one of three things. It's either a stock I've traded before, or a stock in a hot sector, or a stock with a recent catalyst. Those are the types of stocks that make up my watch list. And then, the way I do it is that I'm not looking at a bunch of charts. I'm looking at the volume and the price, the bid, the ask, level 2, things like that. If something enters the range and it looks like something I might want to trade, then I'm really opening up the chart and looking at the candles more closely. But initially, I kind of feel like I know what I need to see volume wise, at least to start the process. I know the price range that I might want to buy it at, especially on a dip. But if I feel like it's reached that area and the volume is potentially going to be there to support it, then I'm really diving into the chart. But I'm not one of those people that has multiple screens up with multiple charts that they're looking at one time.
Oh,
I mean,
okay.
I'm looking at constant bid and ask boxes with volume and level 2, but I may only be looking at one chart literally at a time.
Wow.
I don't have multiple charts up because I don't think I need to.
Yeah.
I know when it gets to a certain point, I can dive into the chart. But I would rather look at a number of level 2 things and bid and ask and volume and that type of stuff first. So it's kind of a process for me that way. It's something I evolved into over time. But, I've only got 2 eyes, so I try to be real concise and clear. I use 2 monitors. That's it.
Gotcha. No, that's really, really interesting. You don't hear that too often on the show. That a trader's looking at one chart, and actually, that's kind of what I've been doing, to be honest with you, because I trade from work a lot of the time, and so I'm kind of similar to you in that sense that I only have space for one chart though, and so I've kind of been trained that way, and so very similar, and it's just interesting to hear.
Yeah.
A question coming in from chat. Kind of a psychology-based question. Did you ever have a time, it's from Mudcats. Thanks, Mudcats. Did you ever have a time where you wanted to give up? And what was your mindset like in that moment? And how did you get out of it, if you did? Maybe you didn't.
Well, I went 90 months where I never blew up an account,
Wow.
but I also didn't make a lot of money either. I just treaded water. I'd have months where I'd make a few thousand. I'd have months where I'd lose a few thousand. And I did that for more than 7 years. And I had a full-time job. So, there was money coming into my household and my wife worked. So we had money. We were making money. But as far as trading, my ego and FOMO got in the way of me being successful. And so I never thought about quitting. In fact, it was the opposite. I really wanted to make it work. But I can think of many times between 2012 and 2018 when I would think, I want to do this full time. And I'd talk to my wife and she'd say, look, let's be realistic. Unless you are consistently making money, then there's nothing to talk about. And she was 100% right. And so I needed to prove that to myself that I could make money consistently before I decided to go full time. And once I did, then I had the confidence that I had a plan and the proper discipline necessary to make this work. So I never thought about quitting because I love trading. I mean,
Right.
I love it. It's my passion.
Of course.
So-
That's what you need to remain in the game, I think.
You do. I mean, it's like anything. It's not just with trading. It's anything in life. I mean, if you love it, the money follows the passion, not necessarily the other way around. And so I knew I loved it. I knew I wanted to do it. But I also knew when push came to shove that I wasn't ready, until 2019. I couldn't do it in 2012 or 14 or 18. I wasn't ready. I was not a strong enough trader, and there was no one to blame but myself for that. So, I never wanted to quit. I just wanted to find a way, and it started within myself.
That's awesome, man. Really, really cool to hear. And did you have a kind of a period where you were just like unprofitable and losing money, or was that something you're fortunate enough to not have to go through?
I mean, it ebbed and flowed.
Okay.
There were periods where I make money for several days in a row, and I think, oh, I've got it figured out now, and we're going to be good. But I wasn't, because I could not do it week after week, month after month. I couldn't do it, and the reason I couldn't do it is because I was constantly bending my rules. I was constantly figuring, oh, I can do it the same way. There'll be a different result now. And there wasn't. I just kept banging my head against the wall, expecting that, well, one of these days, one of these months, one of these years, I'm going to be very consistent and successful. And it was not going to happen looking back, because I was not rigid enough with my rules. I did not have the proper discipline necessary to trade successfully. When I finally stopped doing that, not just 1 week or 1 month, every week, every month, I just quit doing that. I started making money consistently. I mean, it was like a totally different trader. And
Right.
so I'll never go back to the other way. My memory is real good. I remember all those days, all those weeks, all those months for over 7 years, just treading water, being mediocre, and absolutely being sick of it, to the
Mm-hmm.
point where I knew that the only person that could change it was me.
Right. Man, that's crazy. And another question from the bastard here. How were you able to trade and make money consistently while working a full-time job? Were you on site, at an office, etc.?
I wasn't.
Okay.
Some people are pretty good at it. I was not.
Gotcha.
It was too tough for me. I would have to swing trade a lot more than day trade, because I couldn't watch the screen. So back then I was primarily a swing trader
Oh,
with
interesting.
some day trades, whereas now I'm almost 100% a day trader, or I might hold overnight. But back then, because I was traveling and I was working, and I couldn't look at the screen all day every day, and so it was tough. It was tough, because nothing against swing trading, certainly. Uh, many people are very, very good at it, but what I noticed was, when I was swing trading, I would get too loose. I would just hold stock. They'd be down. I'm like, that's okay. I'm swing trading it, so whatever. And that was the wrong mental approach, even though I couldn't look at the screen all the time. So, no, it was tough for me. I was not very good at it on a consistent basis.
Gotcha. Great answer. Um, what do you think would be the top three rules or pieces of psychology that a trader should have in order to be consistent?
Number one would be to play defense first and know where you're going to get out of the trade if the trade doesn't work before making the trade. That's number one. Know where your stop is before you make the trade, and respect it. That's the first thing. The second, I believe, is to that you have to have volume before price. That price levels don't mean anything without volume. Volume is what moves stocks. And so sometimes I'll see people that'll talk about, well, this price at this level, it's a buy. Well, no, not necessarily, because if there's no volume there to support it, it's not a buy. It's not going to move anywhere. So that would certainly be one of them. And I think the third, for me at least, would be to respect your size and of the positions you take, along with not holding too many positions. I mean, that might be two things more than versus one. But people think that when you hold many positions, you are taking on less risk. But the reality is, it's the opposite. you have a lot more risk. You know, I used to hold double digit positions. Many days years ago, I'd have 13 positions, 15, 18 positions at once. And not only is it hard to keep track of all of those, but you feel like that you're spreading out the risk, and the reality is that you're really not. You're taking on more risk because you're too exposed, and they're not all going to perform. And so that, along with the position size itself, um, of what you get into, I think people have to be very careful. Some people want to YOLO their account, um, and take a shot and all those things, and to me, that's not trading. That's just gambling.
Right.
And I'm a proponent of, look, build the wall one brick at a time. Everyone starts with a small account. You build it and it gets bigger, and then you can build it and it gets bigger and bigger and bigger. You just, this is not a sprint. This is a marathon. And everyone with a big account started with a small account. You got to learn to trade. You have to learn to have rules and a plan and respect your discipline and all those things. And then you can start sizing up. But really, sizing up to me is proportionate, because I won't put more than 10% of my account in any one position. And so 10% now is a lot more money than it was a few years ago.
Of
But it's
course.
still 10% of my portfolio. So that to me that's a rule for me. That's one of my rules. And I don't break it.
No, that's a great one. Do you want to talk about your rules and kind of go through them, or is that kind of a private thing?
Not at all. I post them all the time.
Yeah, let's hear it.
I've talked about a few already.
Yep.
The first is know where your stop is when you enter a position. The second is no more than 10% of my portfolio in any one position. The third is no more than a 10% maximum loss from my entry. People say, well, why? Like, what's the relevance of those two things? And for me, it's real simple. If I have 10% of my portfolio in one stock, and the most I'm going to lose on that stock is 10% for my entry, if I swing and miss completely, it is only a 1% hit to my portfolio. 1%, that's it. And I can come back from that. In fact, if it happens a few times, I can come back from that. And so those are key rules for me, because I don't want to lose more than 1% of my portfolio on any trade that's within my control. The next one is volume before price, which we discussed. That you have to have volume. It must precede price.
Right.
If you trade just on a price level, no good. Another one is, I don't like to trade the first 20 minutes of the regular session. We talked about that, and the chaos and the whipsawing and all that.
Of course.
When I swing trade or hold stocks overnight, I like to reduce size. I don't like to hold the same size position I have during the regular session. And the reason is because lots of negative things can happen after hours or pre-market that may not necessarily happen during the regular session when the market's open. Most companies are not going to put out a negative PR when the market is open, but they'll do it when the market's closed. I want the majority of my risk to be when the market is open. That's a big one. Another one is that to trust the chart. All you have is the chart and the history. When you look left, at some point, if you're going to rely on the chart, you're a technical trader, which I am, you got to trust the chart. Another one is to trust and believe in myself. You make many trades, you build up your skill set, you develop your confidence. You have to trust yourself. You have to trust yourself to follow your plan. Your plan is there to protect you versus you, right? And so, our plan protects us from ourselves.
Yeah.
And you gotta believe in yourself. I mean, this pie is big enough for everybody. So if you want it, there's plenty of room to be successful. It's there for anyone to take advantage of and prosper with. I don't know if that's all 10, but that's pretty close.
Yeah, no, 100%. Someone just posted it in the Discord here.
Oh,
No,
Great.
that's awesome. So I think unless does if sorry, I'm losing my thoughts here. Does Chad have any more questions? If you have any questions, you feel free to throw them in the chat. Just at 100_1,000,000. How important is confidence in trading?
I think it's critical. I think it's critical. But at the same time, you've got to try to trade unemotionally.
Right.
I liken it to a pendulum where greed is on one side and fear is on the other side. And your goal as a trader is to not have the weight of the pendulum move too far in one direction. And so confidence is different than being cocky or arrogant,
Right. Okay.
right? Just like being, having nervous anxiousness regarding trading is different than being so fearful that you're paralyzed and can't move and execute a trade. So people ask me sometimes, are you confident? Yes, I'm confident, but every day before the market opens, I say a prayer that I will respect my rules, and I try to remember that at any given time, if I'm not smart, I have the capability of blowing my account right up. And so am I confident that I can have a profitable day and be green? Yes, or I would not sit down and do this every day.
Right.
I recognize that some days aren't going to be green days, but many of them are green days. And so I'm confident that I know what to do. But at the same time, I am always respecting the market, because if you don't respect the market, you will pay the price and learn the hard way. And so I'm confident, but I'm not cocky, and I don't ever assume it's going to be easy. I see people say it's easy. There's
Yeah.
nothing, there's nothing easy about doing this. This is work and focus and discipline.
100%. And just to kind of expand on that a bit, one thing I wanted to talk about is when traders get a bias into their head and they go to the market and they're like, oh, it's going to pull back and then it's going to just like climb up all day. What are your thoughts on having a bias, and how do you eliminate that?
Well, that's an interesting question, because I think that as a trader, we all formulate opinions, right?
Mm-hmm.
You formulate an opinion on what you think has the potential to happen. And from that, you decide if you're going to take a trade. Then if you are, you eventually make that trade. And so it all starts with an opinion, either on something fundamental or a technical reason, or whatever the reason is. It starts with an opinion or a bias or thought. That's fine. Everyone has that. That's the beauty of trading. But when that bias overrides the price action that you see taking place on a stock, if it's not working the way that you thought it would, to not pay attention to that is detrimental. And that's something that I think that professional traders understand and amateur traders don't. It's that, look, your bias is fine, but this need to always be right is a bunch of garbage.
Yeah.
You don't always need to be right. Sometimes you're going to be right. Sometimes you're going to be wrong. It's what you do when you're wrong, and taking your bias and shoving it aside and selling the stock, that will determine ultimately your destiny in this trading career of yours.
No, that's a really great answer. Thank you. Yeah, I think that's pretty good. Is there anything that you think we kind of missed, or anything that you'd like to touch on that you think is really critical, maybe for the market we're in right now, for small accounts, people who maybe just blew up? Is there anything that you think that we missed that you think we should touch on to kind of move towards the end here?
Well, I guess in closing, again, thank you very much for the time, and thank you to everyone who has tuned in for this. I appreciate it, and I hope I hope you've enjoyed it. I would just like to encourage people to stay the course. You know, you're listening to somebody who went many years wondering if I could ever get over the hump. And so if you can relate to what I'm saying, regardless of how long it's been, if you have a passion for this, don't quit. Just keep working at it and be very honest with yourself, be very realistic with yourself, and identify the areas that you need to improve upon, and do it. And be kind to yourself, you know, because it's never too late. I mean, I'm 57 years old. It's never too late to evolve and ramp up and grow and master something if you really want this. And so that would be what I would want to tell people in closing, is just to stay the course, believe in yourself, and don't let anyone deny you this is a potential dream if it's what you really want.
100%. I couldn't have said it better. You know, and I think one of the issues too with a lot of newer traders is that it's not like there's not enough ways to trade. It's that there's so many, and it's hard to kind of stick with a plan that you choose and see it through all of its flaws and all of its pros and cons and stuff like that. How important is it to kind of stick to something and really work through it and then just tweak it?
I think it's very important. When 10 years ago, you know, in late 2011, early 2012, when I was becoming a much more active trader, I was constantly trying to create these rules for myself, right? I knew I needed some rules, and I was constantly tweaking them and making changes. And as I was trading, I was trying to develop some kind of a system that I could follow. And it literally took me until 2017 to develop the rules that I currently use today. So the good news is I got my rules where I wanted to have them for me. The bad news is I had them in 2017, but didn't start following them 100% until early 2019. For 2 years, I had my rules that I use today and didn't follow them all the time. And so that was a missed opportunity for me. You know, I could have turned the corner a lot sooner than I did if I would have trusted it. But I think that everyone has, hopefully, their own set of rules and a plan. And it's okay to tweak it as time goes on. But when you find something that's working for you, you keep doing it until it doesn't work anymore. I don't care what it is. If it's working for you, keep doing it, because that's the way you keep score. And when I say if it's working for you, I'm not talking about for a couple days or a couple months. I'm talking about you can make it work for you over time, indefinitely, that you believe that you could trade with your current plan for the rest of your career, for years, hopefully decades, and everything would work over the course of time successfully because you have something that you can fall back on and rely on. That's when, if you feel like that, if you tested it enough, then you can go with it. And if you're out there listening and you have something like that, keep doing it. Keep doing it because something's working. So ride it.
100%. Thanks, man. That's so cool. Very, very inspirational. I just want to say huge shout to yourself for all the hard work that you put out there for free for people to learn and kind of build some confidence. And I truly appreciate you coming on the show again. This one will not get deleted. I'm going to remember to save this after. I don't know how in the first one. I thought I saved it, and it got erased somehow. But thank you so much for coming on today, man. I truly, truly appreciate it.
Well, thank you for all that you do also. You've had some amazing podcasts on.
Thanks.
And I have watched and listened to many of them, and I appreciate what you do, and I know that many others out there do as well. So keep doing you, man, because it's good stuff.
Thanks, man. That makes me feel really good, actually. Thank you. I appreciate you tuning in. Fan of the show. Let's go.
Absolutely.
Let's wrap it up with one last question for you. Do you ever try to hit home runs?
No. Nope. I did hit a triple last week by accident.
Okay,
You
okay.
know, something took off and kept running, but nope. That's not the way I play the game.
Gotcha. Just hitting singles and doubles.
That's me.
Yes, sir. Thanks for coming on, man. I truly appreciate it. Type ones in chat if you guys enjoyed it tonight. And yeah, so this will be available on YouTube and available under Twitch videos as soon as I hit the end button. Thank you so much for coming on, singles and doubles, and good luck in the market for the rest of the week. And yeah, we'll have you on again in the future, man. These sessions are awesome.
Thank you, 100. I enjoyed it, and best of luck to you going forward.
Thank you, sir. I appreciate it. Have a great
Take
night
care.
and a great weekend. Enjoy some time with the family this weekend.
You got it, man. You too.
All right, take care.
Bye.
All right, guys. Hang on. I got to fix my webcam here. It's going to do that. Who enjoyed the stream tonight? Oh, my God. What the hell's happening? Give me a second. No way, dude. Hold up. I swear this never happens. What the hell? What the hell's happening? Okay, there we go. All right. It's fixed now. Huge shout out to everyone who came out today. I appreciate all you guys. Hella zoomed in. I don't know what happened here. What happened? Thank you guys for tuning in. I hope you enjoyed that. I think that was a really awesome session. Huge shout out to Singles and Doubles. Let me show you where you can find him out on Twitter. If you're not following him and you want some more content, some more Singles and Doubles content, yes sir. Let me show you. Here he is, folks. Singles and Doubles. It's gonna be at Singles Doubles out on Twitter. Go give him a follow. Great guy. Awesome to just like his post. I have my bell notifications on because he just like he resets you sometimes. You know what I mean? Like you get in a certain way of thinking, and he just grounds you again. And I love that about him. So we'll have him on again and again. Great guy. Give him a follow. Well deserved. And thank you guys. Thank you, chat, for coming out tonight. I truly appreciate it. It means a lot, guys. And I hope you have a great night. And good luck in the rest of the week. All right, guys? I'll see you later. I love and appreciate every single one of you. This video will be available to rewatch on YouTube and on our Twitch videos as soon as I hit end. Thank you guys for coming out. I love you. I love this community. And I'll see you next time. 100 out.
Taking over your body, it's flowing through your mind. This feeling's got me on fire. Don't ever leave it all behind. Can you feel the attraction? Feel the attraction. Can you feel it between us? This energy's inside us like electricity. Feel the love running through like electricity. Feel the love.
Okay.
Can you feel me? Ooh, can you feel me? Keep on running.
Keep on running.
Keep on running.
are legendary.
Tell me what you're chasing, because tonight I'll never give you what you want. Ooh, Jason, and if you can't escape it, I hope you find whatever you've been looking for.
And I'm gonna keep on, keep on, keep on, keep on, keep on running.
Keep on running.
And I'm gonna keep on, keep on, keep on, keep on, keep on running.
Keep on running.
You are legendary.